Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for December 8th of 2019 for the Forex Trading Room. We go through our usual agenda, look at the prior week, our currency strength meter for the past month and past week, our calendar of fundamental announcements, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with our long-term ledger, we are slightly down after closing the £2 trades that were obviously going against. I'm pretty sure we'll be back into these trades later this week on the back of the UK's parliamentary election. In better news, though, that Euro-New Zealand trade, our one remaining trade open on this account, has really moved in our favor. We're carrying about 300 pips of profit, and it does show no sign of stopping so far. So while we are slightly down on the realized gains, our open profit is pretty much for that, and we're looking at it potentially moving even much further. We're nowhere near our take profit on that trade. We're looking for, what is that, 900 pips? Yes, indeed, 900 pips. So we're pretty good there, and at this point, 200 of the 300 pips of open profit that we're carrying. So that trade is definitely now a winner, and it is one of those trades that we really love on the long-term account, as it does have the potential to move that far. On the intermediate term exchange this week, we added 2 new trades, with a long on the USD Swiss and a short on the pound dollar, again in anticipation of the elections this week, where my expectation, and I should call it my bias, it's definitely not a prediction, but my bias is for the bubble to burst on the pound, a steep retracement back down. Of course, I'm not betting the farm on this. It's just one trade out of many, but I do think it has a pretty good potential. The rest of the trades that we have on the account are pretty much where they were. Well, we're in a much better position than we were at the beginning of last week. So this week had a lot of these pairs retraced back in our favor. We are still slightly negative on open balance on these trades, but again, moving in the right direction, most of them, and some of them are back to profit. And last but not least, our short-term ledger, not a whole lot of trades this week. We entered 5 trades, 3 of them went our way, 2 didn't. However, we made more than we lost on them, so we are up 1.13% for the week. Not a whole lot, but hey, any positive is always welcome. Notes and opportunities for mentioning from the top of the call, finally, we've got the UK parliamentary elections happening this week. So that is, of course, going to be our main fundy for the week, but it's not the only one. We've got multiple interest rate decisions and other fun stuff coming on the calendar, including one from the Swiss National Bank, which I think they do that every 3 months. So it is memorable to have one. We did have a flat to bullish week on the accounts, as I just covered on the ledgers. The market is decidedly sluggish, which is not odd for December. It is what it is, but again, this week promises to have a lot of fireworks. The Euro-New Zealand trade, as I mentioned, in the long-term account is our shining light right now, carrying about 300 pips of open profit. And in other news, we have set dates for our live event next year. It's going to be April the 29th and 30th, as well as May 1st. It's going to be a details are on the website, including a discount for early signups. And what we're going to do is a 3-day event where I am going to run attendees through everything I normally do in the Forex market, from the beginning of the day to the end. Now, you guys have been with me for a while. You know I don't spend more than an hour or so a day, but that builds on years of experience reading the charts, analyzing the fundamentals, and doing a myriad of other things. So those 3 days will be sort of an intensive immersion, do as do as well, as I actually do every single day. So it'll be teaching by experience, by example. And I picked those days because they're not only end of the month, but we will have our final day. May 1st is obviously first of the month, so we will have the non-farm payroll coming out that day, which is our main funding for every single month. So hopefully that will be a good 3 days worth of trading. We will be teaching, we'll be trading live, and obviously we'll be hanging out with everybody. So anybody who wants to sign up, the signups are open. Just go to our main page and you will see the sign up instructions at the top. Moving on to our relative strength meter for the past 30 days and the past week. And yes, let's see. So for the past 30 days, and this is a little bit of a deceptive one. While we did have some pretty good movements, especially out of the pound and the kiwi, definitely those two outshone everybody. Have movements out of silver and gold, and to some degree they did color the charts. So that 4.94% is mainly due to silver and not necessarily to movements in the Forex. However, running from the top, Aussie has had a poor showing for the past 30 days, the CAD as well, and obviously silver being the clear loser. On the more positive side, the Swiss franc has recovered nicely. The pound, of course, had a brilliant month, but I think that is about to change this week. And the kiwi, of course, was the clear winner. We see the dollar, the yen, and the euro being sort of middle of the pack there. They lost some. The actual week that just ended, we can see that the clear, and I didn't update the date on the week ending November 29th. It's week ending December 6th. I apologize for that. But that 4.82% that we're showing as volatility for the week, again, is mainly due to silver moving sharply down. The week was actually very sluggish and flat as regards the Forex, with the possible exception of the kiwi, which, as we pointed out in that Euro New Zealand trade, has been the shining light for the week and possibly for the past 3 weeks. So we have the Aussie gaining, CAD middle of the pack, Swiss middle, Euro middle. The pound gained, not a whole lot, but it did gain. The yen was middle of the pack, Kiwi the clear winner, dollar the clear loser. We have dollar weakness come back significantly into the market on the back of the impeachment proceedings currently underway against President Trump, the Chinese trade stuff going under. It's a lot of negatives to the dollar right now. But we also had a very, very good job report out of the U.S. This past Friday, which gave some support to the dollar. So everything is not negative. But that being said, I do see a lot of stormy clouds on the horizon for the dollar that has to be taken into account, regardless of the job market. And I should also point out that the Canadian labor report was dismal. And Canada lost more jobs this month than any time in my memory of Canadian job reports. We had 70,000 plus jobs lost. And while the Canadian weakened to some degree on the back of that, it's not a huge thing. Some of these things are cyclical, seasonal, whatever you want to call them. And while 70,000 jobs seems like a lot, and it really is economy. It's not the end of the world. And I would have to see this repeated multiple months going forward for us to say that Canada is in trouble. This might have been a fluke, a one-off. So it's going to be very interesting to look at next month's Canadian labor report to see what's going on there. Fundamental announcements for this week coming up, and I've highlighted the ones that we will be trading live starting Wednesday with the Fed interest rate decision. We also have, of course, the parliamentary election in the UK. That is going to be our main fundy. Obviously, that is not a 1 minute kind of event. It's not something that's happening that day at 7 p.m. U.S. Eastern time. It's something that's going to be ongoing for the next day. So that's when the polls open officially, I guess, in the UK. The results will probably not be coming in till a good 12, 16, 18, maybe even 24 hours later. So we will be playing that one by ear. At some point, I will be opening up the trading room to start trading the preliminary results as they come in, but I'm not sure of the timing of that yet. Thursday morning, early morning, 3:30 a.m. U.S. Eastern Time, we have the Swiss National Bank interest rate decision. Then a few hours later, at 7:45 U.S. Eastern Time, a.m., we have the European Central Bank interest rate decision. So that day we're going to have two of them. And then we do have a governor's speech. The Bank of Canada's governor is going to be making a speech. Now, normally I don't trade these, but with all the uncertainty in the Canadian dollar following the, as I said, the dismal last week, it's probably a good idea to be there for this speech. So we will be trading it live. That's on Thursday. And then Friday, we have no fundies to look forward to. So while it's not the busiest week we've seen, it is a pretty key week, not only for the interest rate decisions coming out, but more importantly, the UK's parliamentary election, where they will be either confirming Boris Johnson as staying in his job as Prime Minister, or possibly passing the buck on to a Jeremy Corbyn. Either one of these events, Boris winning or Corbyn winning, I see as being negative for the pound. It doesn't seem to have a good outlook either way. Again, my opinion, take that with a grain of salt, but that's the way I will be probably trading it. Moving on to our charts, commodities, we have oil basically and up those two trend lines, and we had some key OPEC meetings last week where they were trying to set quotas, and we already see a lot of grumbling from Saudi Arabia, who are not in favor of continuing to squash the production of oil because they're in the process of IPOing, initial public offering, of Aramco. Aramco is the Saudi Arabian crown jewel. It is their petroleum company, and they are doing an IPO very soon. So they want to increase output. They want to increase profits and revenue and this, that, and the other to have a better IPO. So the fact that Russia, Iran, and some of the other OPEC countries want to keep oil production low to support prices is not being received too well by the Saudis. So you would think that oil would have gone down on the idea that there's going to be a lessening of these quotas, but instead the uncertainty made it bump up towards the top of its range to the 54 area, and I'm sorry, the 60 area, the 5999 is what it says there. So the 60 area, and then bounced off on Friday. It's still traveling very near the top of its range, and it is still following that trend line, the bottom of that trend line, as it makes its way up. So we'll have to see what that means for the price of oil in the next 30 days as we wind down the year. I do trade oil, or rather I trade options that are tied to oil. So this is very, very intriguing and interesting to me. I would obviously love for it to go around the 66, but I'll take whatever I can get. So far, oil is doing a pretty nice recovery. Moving on to the Forex, and we can see that the euro dollar has been of late very, very flat. It's refusing to go up, refusing to go down. It hit resistance last week near the top of the Ichimoku cloud, and on Friday had a massive swing down into dollar strength. And of course, I've already explained why this happened. It was one of the more magnificent job reports that's come out. Apparently, last month we created more than 250,000 jobs or somewhere around that number. So that propped up the dollar quite nicely towards the end of the week. But we can see how the dollar was just floundering until that final day. So we'll have to see how the week begins. If we have more support for the dollar and it continues heading down, we do have an open trade on the euro dollar trading it down. So obviously our sympathies are with the dollar getting stronger against the pound dollar, very near the top of its range, and I took advantage of that to go short last week on the intermediate term account. For one, the elections, as I mentioned, my bias is that there will be pound weakness before there's anything else going on. And I figured catching it at the top of its range was a way to increase the potential profit. Obviously, there is a risk there. It could go in the other direction, but that's what trading is. Trading is managing risk and maximizing your opportunities for gain. So for me, it's at the top of the range, a perfect opportunity to do a short. And it is far above the Ichimoku cloud, so we'll see if it returns to its prior range, at least a test of the cloud, and perhaps even a crossing. And again, the kicker will be the elections later this week. USD JPY, very flat, still trying to head up dollar strength. So we do have an upward movement on the USD JPY, but it continues to fail around the 109 area and go back to the top of the cloud. We are trading this one up, so we're still trying to trade it up to the 112 area. Simply because that's what it's doing. We have had a Kumo cross way back in August, and since then it has been bullish, traveling on the upper regions of the cloud. As we wind down the year, I will reassess all these open trades, especially the ones that we've had open for any considerable period of time. But so long as it remains above the Ichimoku cloud, we will be bullish on the USD JPY. USD CAD, we're trading this one down, and obviously Friday was not a good day for us as it retreated. But that said, we've been in this trade for a while, and we're not all that bad. We're not carrying a deep loss on that open trade. In fact, I think our deepest loss, and I don't recall which one it is around the neighborhood of 60 pips. It could be this one. So anyway, we're still pretty good on our open trades here, and we are looking for a return of the CAD towards the bottom. That can be on a combination of CAD strength coming back, or dollar weakness, or preferably a combination of both. But for now, we're cautiously bearish on the USD CAD. It seems to be finding resistance around the 133 consistently, refusing to go up above that point. So we will, in this case, remain bearish on it. We also see a dropping MACD if we're looking at the indicators towards the bottom of the screen. So likely a bearish movement will continue for at least some time. USD Swiss, or textbook example of a sideways pair. It has hit the bottom of its sideways range, and we did start trading it up later in the week. I think we're carrying some profit on this trade, mainly on the back of a Friday's good job report out of the U.S. So Friday's candle was really the deeper movement of the week. Still underneath the Ichimoku cloud, so there is still some caution to be observed there. But again, we're looking at a sideways channel and a return to the top of that channel. Aussie dollar also very flat and staying within the Ichimoku cloud, a bearish Ichimoku cloud at this point. And well, we'll have to see what comes out of it. It is at resistance. So if resistance holds, we should see this one drop back down. Again, we have had strength back on the back of the non-farm payroll. Doesn't seem to have affected this pair much so far, but I do see Aussie weakness. There's nothing good coming out of the Aussie economy right now. And the USD, while I'm a little bit concerned about the long-term outlook for the US dollar, I think we'll probably still have a good push to the bottom on this pair before all is said and done. And we do have an open trade on this one also, trying to trade it down on the intermediate. Kiwi dollar, this one is breaking out in the opposite direction, and we did go long on the Kiwi dollar. Obviously, we're seeing some Kiwi strength returning to the market, and even Friday's non-farm payroll just kept going up. So we're trading this one just based on the Kumo breakout. Obviously, we don't expect every one of our trades to be winners, but this seemed to be a likely candidate for a contrarian trade, based on what it is doing from a price action perspective. Aussie Canadian, very flat. We're trading this one down. Obviously, the Canadian job report on Friday did affect us, and Friday we can see that movement up. But as I said before, I don't see that Canadian job report as having long-term consequences unless we continue seeing bad job reports every month. And again, they're every month. So we still have a good month between the last one and the next one. And I don't expect to see it move that far up, especially with the Australian weakness that we know is in the market. I'm not looking for much from this trade, just a quick trip back to the bottom, and we'll take some profit. And so far, I'm willing to continue in the trade. Euro Swiss, another one that is slightly sideways, but also a nice resistance at the top of the Ichimoku cloud. So I forget if we're in this pair again. We've been in and out of it, mostly at profit. But if I were to trade it, if I'm not trading it, it would definitely be a short, trying to get it to the bottom of the chart yet again. Euro pound, not much that we can say about this one. Obviously, I am expecting a trip towards the top on the back of the UK's election later this week. Until then, this one is no trade. I will point out that it has given us lower lows. It's broken out of the prior bottom, which we had back in April. It's broken out completely and giving us 3 days of lower lows. So we'll have to see how the week starts, and obviously be there to take advantage of any movements when the election results come out. Euro JPY, very flat. We are in this one in to break even or maybe a slight profit right now, but we can see that it's just clinging to the top of that Ichimoku cloud. I'm still waiting for a breakout towards the bottom. Obviously, my preferred direction, since I am in a short position on this pair, and it's not been cooperating for quite a while. But on the positive side, it's not going up either, and I think the possibilities of it going to the bottom are far greater than a trip towards the top, simply because the euro is in weakness play. It has been for quite a while, and while the yen hasn't seemed to be catching a break lately, there's no reason for the yen to be weak. So eventually we're going to have a trip towards the bottom. The question is, are we still going to be in that trade when that happens? On the indicators, we also see some have a dropping MACD, and we also have the Williams percent rapidly dropping towards the trigger line at the bottom. So we may be in this trade a little bit early. We should have gotten in when the Williams crosses the 80 line at the bottom. But that's how you make a little bit more money out of these trades. I think the risk of it going up are very low. Euro Canadian, another very flat, although it does have a wide range in this sideways movement. It has found resistance at the 147.50 multiple times over the past few months. And we are trading this one down as well. A quick trip to the bottom of the chart, and we'll get out at whatever profit we can get. With the job report on Friday, obviously it found support there at the top of the Ichimoku cloud and it's back up, but I don't see that as having wings. This will probably turn around before too long. Again, we have to wait to see how the week begins, but I think this one, again, has a higher likelihood of dropping towards the bottom. Pound JPY, a pound pair. What are you going to say? The pound has had a brilliant month, and well, I shouldn't say brilliant month. It was sideways for the better part of November, but towards the end of November, it started a breakout towards the top. Part of it is pound strength for whatever reasons. Again, the market is always right, not me. But so the pound has been gaining strength, but the yen has also been dropping. And like I said, no particular reason for that other than that's what the market is doing. So I would expect this, as well as the other pound pairs, to give us some really fine opportunities after the election results get published. Aussie JPY very flat, down, and we're back break even or close to it. And none of our open trades are carrying any significant levels of profit right now. They've all mostly come back. The deepest one was 60 pips when I checked the charts earlier today. So this one we're looking as well for a trip towards the bottom. And well, that's pretty much it. Again, Aussie weakness, yen strength. That is my personal bias. Euro New Zealand, my favorite chart right now, obviously. You can see how nicely it's been moving down. So we are carrying 300 pips of profit right now. And look at that move on Friday. So we have a lot of Kiwi strength against Euro weakness. And we'll see if we finally get that trip towards the bottom that I've been trying to get into for months now. And I shouldn't be ungrateful. We've made profit off the Euro every time it tries to do a breakout, but it's been small profit. Right now is the first time in months that we're carrying 300 plus pips of open profit on one trade. So I'm pretty happy with that one. Pound Canadian, same story as with the other pound pairs, with the added aggravation of the Canadian job report on Friday. So this one is also giving us consistently higher highs. And again, the election is probably what's going to turn it around, if anything can. And last but not least, pound Swiss, same story. Pound pair going up, pound strength for whatever reason, and waiting on the election. We're probably going to go in heavy on these pound pairs when the election results get posted. We're likely going to see a sharp drop, a little bit of retracing, and then a sustained movement, hopefully in the downward direction. So we'll be setting up some straddles on the pound pairs. I warn people, when stuff like this happens, the spreads get pretty wild. So you may see that it will cost a lot more to trade the pound this week. It's just a nature of the beast. Even if you get into these trades early, you're going to find that the spread widens during the event. So you're still going to be hit by a higher spread no matter what happens. So be careful how you trade it. Always look and see how much the spread is and how much margin is. Some brokers will increase margin on certain currencies when key events are happening. So as always, pay attention. Make sure you understand what you're doing and trade carefully. That is the end of our charts for this review. Setups I see in progress. Obviously, the elephant in the room right now is going to be the pound, with the UK's parliamentary election set for this week. The dollar alternating between bullish and bearish, and I've been mentioning that spectacular NFP from last week as being a huge help, but I still see a lot of dark clouds on the horizon for the dollar. If you were forcing me to trade the dollar for a long term, a position I could not get out of for 2 or more years, I would be definitely shorting the dollar at this point. For shorter term, it can certainly continue moving into strength for a while. In Canada, I've said it, the Canadians had the worst month for job losses in my memory. In the entire time I've been trading Forex and following the labor reports of all these different countries. But while the number seems large, is it really? It's just 1 month. Things happen that could be explained away by specific things, companies closing or seasonal fire. That is not going to repeat month after month. So I would be still looking towards the next labor report before I make any decisions that Canada is circling the drain. The Swiss is in a sideways channel. So that's what it's doing, and we will be trading it accordingly. So we'll be going in more into channel bounce trades on the Swiss than anything else, except if it's paired with a currency that's moving independently in one or the other direction. And the euro continues to implode. You can see it quite clearly on the euro New Zealand. That is definitely heading in the wrong direction. The euro dollar is also another one where, despite dollar weakness, we can see that euro dollar heading down consistently. So euro not in a good position right now, and I will be more likely to short the euro and then trade the direction. And that's a review. Some final words here. As always, try to keep your risk low. That is the big secret to trading anything, not just the Forex. Imagine if halfway through a horse race, they allowed you to change your bet. They don't. Once you place a bet on a horse, you're done until the end of the race. Or even if they allowed you to cancel your trade halfway through the race and get back 90% of your money. That's exactly what happens in the Forex market. So if horses work that way, we'd be, or at least I'd be every day at the horse track, but they don't. So the secret to trading and pretty much anything else involving money where there is the uncertainty factor is not to run out of money. So that when we're actually on the right side of a bet or of a trade or anything else, we still have money to be there and just ride it to the finish line. That's the market, except we're not betting, of course, for a reason, which is what I call a system. But if we don't like the trade halfway in, we can cancel or change it. That gives you huge power. Take advantage of that in your trading. Remember, you don't marry a trade. You can always get out of a trade and go in the opposite direction, trade something else, or get out the market altogether for a while. The important thing is don't put all your money at risk at one time. So the most important thing for you guys as traders is risk control. Keep your losses small, and then you'll be there when your horse, places first. And that's going to be it for me for the week. Do I have any comments or questions from anyone before we go off? Okay, then thank you very much, and I will talk to you guys tomorrow, 8 p.m. session. Have fun.